Hey you guys, I'm Phil Town from Rule Number 1 Investing, and today I'm going to give you some advice about investing in stock markets outside the US. When it comes to investing, the more options you are armed with, the more choices you have, the better. While the United States stock market is a really great place with lots of opportunities for investors of all kinds, having international markets available to you can open up a number of new opportunities for you to pursue. Nevertheless, there's a thing here. Investing in stock markets outside the US is not without its risk, and I want to talk to you about those. And there are a number of important factors you're going to want to consider before you put your money into foreign stocks in markets away from the US. The first step to investing in stock markets outside the US is to know which options you have available. So the New York Stock Exchange is the largest stock exchange in the world. Still, a number of other stock exchanges across Europe and Asia are getting really well established. 3 of the largest stock exchanges you can have to choose from outside the NYSE are the Tokyo Stock Exchange, the Hong Kong Exchange, and the London Exchange. And there are more where you can invest, although they're maybe a little bit smaller. The Tokyo Stock Exchange is the second largest stock exchange in the world. There's $3 trillion worth of companies. By comparison, the US stock exchanges are tracking about $28 trillion. So you can see there's a very big step down into the Tokyo Exchange. Currently, the TSE, as it's known, has around 2,000 firms listed, and lately the TSE has been growing at a pretty good clip thanks to the strength of Japan's national currency, the yen, all of which is a miracle and a mystery. This stock exchange has been going, either down to sideways for about 20 years. And I'll tell you, when it breaks loose, it may just turn out to be a great place to have some money. The 1,500 companies listed in the Hong Kong Stock Exchange represent about $2 trillion in market cap. Most important thing about the Hong Kong Exchange that gives global investors an inroad into the Chinese market, because you can't invest in Chinese companies directly listed in the mainland Chinese markets if you're a foreigner. The London Stock Exchange has 3,000 companies listed, which represent about $2.2 trillion in the market cap. By the way, market cap is just the total price of all the stocks in all those companies. And so we just end up calling it the market capitalization. The LSE, London Stock Exchange, is also considered to be the most international of stock exchanges. It represents a really diverse range of companies that are listed there from all over the world. So while these 3 stock exchanges represent the largest exchanges outside the US, they are not the only ones you can invest in. Other options include the Australia Stock Exchange, the Sao Paulo Stock Exchange, the Bombay Stock Exchange, Argentina's stock exchange. So every country almost has a stock exchange. And by the way, one of the best books ever written about going out and trying to invest in foreign stock exchanges is a book called The Investment Biker by the hardcore biker, Jim Rogers. I'm saying that facetiously. Jim is one of the best hedge fund investors ever, made hundreds of millions of dollars working with his partner, George Soros. Jim wrote this amazing book about his journey around the world, going to different stock exchanges, riding a motorcycle. You should read it, it's fabulous. Having looked at the foreign stock exchanges that an investor has to choose from, the question we got to deal with now is, why would someone living in the United States want to invest in companies outside of the United States? Well, while having access to a much wider range of options is nice, most every single investor here in the US can easily achieve their goals just by investing in US stocks. With that said, there are some foreign stocks which are listed in the United States, and there's some significant advantages to buying them in the US market. The number one advantage being they're required to follow the same rules for accounting as all the rest of the US companies, and this is something you will not see in foreign stock exchanges at all. These foreign stocks are called ADRs, and they're listed in the US, and always they're listed in their own stock exchange as well. So one advantage of investing in foreign stocks is it's going to give you access to emerging markets which have no real counterpart in the United States. These stocks are really potential fast growers. They can take off like crazy because they're coming from such small markets and exploding into the global marketplace. making these things a really potentially rewarding, although quite risky, investments for investors to capitalize on. I'd be very careful with them, but the potential is there, let me tell you. Another advantage of investing in stock markets outside the U.S. is that there's plenty of times where international markets outperform the U.S. market. For example, from 2000 to 2009, the S&P 500 saw a compounded annual loss of almost 1% per year. And meanwhile, during that same period, international markets saw returns ranging from about 1% to 13%. So there's a lot of ways to go about investing in foreign stocks, either as individual stocks or in indexes. One of the biggest risks of investing in foreign stocks is the lack of knowledge about the companies you're investing in. So one of the cornerstones of rule number one investing is you've got to understand the businesses you're putting your money into. You got to know their management, you got to know their competitive advantage, what's their moat, what's their mission, how do they plan on doing it, how are they going to get there, if they're on sale, what are they worth. Basically, everything you can know about that company as if you owned it yourself. So when you're investing in foreign markets, though, you kind of run into this risk of having problems really understanding the business you're investing in. So as a U.S. citizen, it is a whole lot easier to learn about a U.S. company that's operating within the United States and within our culture. Assessing their potential is simpler because to some degree, you're already familiar with the market, right? I mean, you can go and kick the tires. Well, what about a Chinese company or a Japanese company? How are you going to do that? Understanding how they operate to the point that you're able to assess their potential for growth is going to be much more difficult. Also, here's the thing. Foreign stocks come with foreign regulations. For example, in China, A shares of Chinese companies are only available to Chinese citizens. There's also, all right, this is a little bit of a joke, but there's also a joke that says that the Chinese businessmen keep 3 sets of books, one for the government, one for their business, and one for their mistress. You can go figure this out, but I'll tell you what, we tend to avoid Chinese companies that are listed in the US because we simply have no way of knowing whether the accounting is real. And there's been a number of scandals with Canadian and US markets on Chinese companies. So you really got to know what you're doing. Also, foreign investment markets do not require the same rigid rules on accounting that the US markets do. So even when you're reading the truth, you're often reading the truth about a company's business that's 6 months to a year old. That could be very, very misleading. And finally, foreign markets have a very different set of rules when it comes to insider trading. Many of those markets have no rules at all, which means that big players in those stock markets, I'm thinking Australia here, can really manipulate the market. So be very, very careful when you start wandering off away from the US markets. It ain't necessarily a level playing field out there. Now, if you aren't keen on the idea of putting your money into a foreign stock exchange, you do have a couple of options. I mentioned the ADRs in the US and also the US multinationals. Now, these are companies which are all over the world. They do a large percentage of their business outside the United States. For example, Coca-Cola has ballpark 2/3 of its revenue coming from outside the US. These companies can provide investors with exposure to international markets for the ups and downs going on out there and for currency exchanges while still allowing them to buy stocks and companies they know and understand, which reminds me that currency exchange can be a real big deal when you're investing in foreign markets. Canadians used to have their dollar match the US dollar 1-for-1. Today, the Canadian dollar is 70% of a US dollar. So it's very, very important that you have a sense of where that currency is headed before you buy into a foreign market. Now, ADRs, I mentioned, are certificates used to buy shares of foreign stocks that are owned by US banks. Don't worry about that. That's just the structure of them. When you buy them in the market, you're not going to be seeing any US bank. You're just buying regular stock shares. And while you still directly purchase this stock when you buy an ADR, you're sort of purchasing it in US dollars. And you're receiving all your dividends in US dollars. So for example, in BP, they ship out all of their dividends everywhere out to the British investors in pounds and pence and whatever all that means. But me, as a BP investor, I get it in pennies and dollars. So cool, that's a big advantage. Now, if you choose to invest in stock markets outside the US, Make sure to do plenty of research beforehand and only put your money in companies that you really understand and believe in. All the principles of rule number 1 investing apply regardless of whether you're investing inside or outside the US, and they should all be taken into consideration. Do your homework and only buy in when you get that rare opportunity to get them on sale. Warren Buffett is famous for saying, never bet against America. And I think that's pretty good advice. Now, I'd love to hear from you guys. Have you ever invested in foreign markets directly? And what was your experience like? So leave a comment below with your answer and I'll be sure to follow up with you. So thanks for watching, you guys. Now go play. And if you enjoyed this video and feel it was valuable for teaching you more about investing, just subscribe to my channel and share this video with your friends or anyone else who might benefit from this information, even if they live somewhere else in the world.